Turkey's been a political problem for years. They've been fighting back. The government's been fighting back against its central bank for years, but now all of a sudden it's begun to matter.
Does it matter?
Well, I guess up until this morning, I thought it was relatively contained in the sense that Turkey, again, has had its issues. Liquidity flows are now beginning to recede from the Fed, the ECB, the Bank of Japan. Rates are going up. Accidents start to happen, and Turkey is an example of that. But with the ECB now warning what it's going to mean for potentially European banks and the exposure they have, now it becomes a real-world problem for everybody else. Where up until yesterday, it was, okay, it's a mess in Turkey.
And just to add to what Peter said, if you look at the dollar, trade-weighted dollar is sort of at the higher end of its recent range. But if you break out the dollar versus EM, it's taken off because you've got weakness against the dollar for much of EM, not just Turkey, but
Argentina,
China,
Brazil.
It's really broad-based. You have a lot of EM debt that's priced in dollars, and yet you've got the Fed, my favorite thing to talk about when it comes to markets, just plodding along raising rates when basically the whole rest of the world isn't. And that is a recipe for a currency crisis.
So we've got here in the U.S., equities have been sort of slowly drifting higher. You know, the word that's come back in is complacent. We've got a VIX under 11. The volatility is in currencies right now. Has the dollar become a safe haven trade?
By default, again, no question. And plus, the ECB, the Fed is obviously much farther along in the tightening cycle, where the BOJ and the ECB are just really getting into extrapolating or extracting themselves from it. And just as we saw, I'm not saying there's a repeat of 07, 08, but everyone ran to the dollar. And yeah, it's happening again. But the dollar index, the euro heavy dollar index, is really just in the middle of this multi-year range. It's really against EM, as Joe mentioned, that it's the strength is more pronounced.
And and China's a big issue too, because incrementally they're the most important driver of growth. And if China had a hard landing, that'd have a profound effect globally on the U.S. economy, which is doing really well. But even 3%, low threes isn't great.
Is anybody here in the view that the pullback in the EM world is actually a worthy buying opportunity?
People will argue that. I don't believe that to be the case. I think yes in some countries. I think China on this pullback is attractive. India, which is much more insulated. The Shanghai Composite is down 50% from its 2007 peak. I mean, that market has done absolutely nothing. And I grant the problems that they're facing right now in terms of debt, transitioning to more of a service-based economy, these tariffs. But over the next couple of years, I think the market's actually pretty attractive.